it's one half of Washington's fault permanently. I'm trying to understand, looking down to the border right now, whether you think that we have sufficient access to the border to understand really what is going on.
Great, guys. Position is opened, long position on euro. So please stay with me because we never put stop loss. We always put stop on profit. So as soon as it will change its direction, it's supposed to fill all orders that right now people want to buy, people looking to buy or sell. It's supposed to fill, and then it will, as you can see, it's trying to change direction, and then we will place stop on profit and then move on and on and on and on. Okay, good, well done for all of you who placed the trade. If you want to get this strategy, you know, you can get from company.co.uk. If you want to follow the trade, you're welcome to follow the trade. So we're also going to plan to have the webinar for next week. So if you would like to register for webinar, you are welcome. Probably tomorrow we will have new date and time when webinar will be available. For today, unfortunately, everything sold out. So for all of you guys who maybe wanted to register, sorry guys. And as you can see, we're nicely moving up, and hopefully this trade will give us decent profit. I'll speak to you later.
Area where you're wonderful to have on because you can help us parse through the signal versus the noise and how much muscle Joe Biden is putting behind some of his tougher talk against China. And I go to that Intel foundry that's being established in Arizona where they're going to build semiconductors. They're going to build chips for other companies. I'm wondering whether the Biden administration is offering incentives to some of the U.S. tech companies to do things like that, to bring manufacturing home, or if this really is just a longer-term bet by Intel that just makes business sense.
I think it's a little bit of both, but I remember you did see President Biden say again and again that he wanted to make sure that he has this whole plan. It's called Build Back Better, and just sort of strengthening America's economy. I expect this is something we're going to be seeing a lot more of in his next infrastructure package. I mean, we call it infrastructure, but there's so many other things that Democrats are hoping to put in there, including incentives for companies to make their products in America, to buy American. We saw one of his early executive orders asking the federal government to make sure that any products they were buying, to try and make sure that those were manufactured in America. So it's definitely been a focus of Biden's, and I think we're going to be seeing that even more in the coming months as the next big legislative package is discussed.
Emily, great to catch up. Thank you. Emily Wilkins there, down in D.C., our Bloomberg government reporter. I think I find it increasingly difficult to put these two stories together. It's okay if you want to change your approach to foreign policy, a multilateral approach, and we've witnessed that with Europe, the United States, and other countries as well, with China over the last couple of months. But when it comes to the economy, if you're going to maintain America first, this is where the difficulties start. Europe has spent a lot of time over the last year negotiating a comprehensive agreement on investment with China. What was the first thing that the Chinese Communist Party did after Europe and the United States got together on a foreign policy issue on human rights? They went after Europe and put pressure on the Europeans. And that's where this starts to break down a little bit, Lisa. If you want your allies to come along with you on foreign policy issues, you need to work with them on economic issues as well, because China has that commercial leverage in the European economy in a massive way. And that's the pressure point, that's the stress point. And the Chinese Communist Party will push on that button and put the Europeans under pressure. So to maintain a multilateral approach on a crucial foreign policy issue, you need to develop stronger economic ties as well. The two need to come hand in hand. Otherwise, the commercial ties within Europe that China has managed to develop over the last decade, that's leverage that they have on the other side of the story too.
Yes, and I think that you're right to bring up that European deal. However, China can also offer that as a carrot to the European Union, saying, we'll keep with you on this, just work with us a little bit more and keep them away from the U.S. collaboration.
That's precisely the issue. That's precisely the issue. Coming up, David Sowerby, Ancora Managing Director and Portfolio Manager. Looking forward to that chat. Equity futures up 14 points. We advance a third of 1%. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
How can somebody remember things that happened 80 years ago? How do you do that?
David, it's easier to remember 80 years ago than what I had for lunch today.
From New York City for our audience worldwide, this is Bloomberg Surveillance live on TV and radio, and here's the price action for you. Into the equity market we go, and here's your snapback on the Nasdaq by about 0.8%. On the Russell, a move at 0.75%, a move higher after a big move lower recently. 7% correction off the highs of the year so far on the Russell. The move off the October low, though, off the back end of October, a 50% rip into the last couple of weeks, and then you get your correction. Is this a pause, a consolidation, a correction? We'll talk about the language you should use a little bit later. Let's switch up the board and get to where some of the pain has been. It's not just been about size, small versus large. It's been about the sector, energy. This is over the last week, the last 5 sessions. Through yesterday, down 7%. Crude biting back a little bit, but still over the last 5 days, off by 8.4% on WTI. And this has been a problem for some of those big trades. The winners have started to get hit in a big way. See it on a Russell, see it in energy as well. Switch up the board and finished on this. The unwind driven maybe by what's happened in the bond market. 10-year yields, 175 last week. This week, all the way back in and more. 162.60 on 10s, 132.49 on 30s. And we're taking down this supply decently. 2-year went okay. Lisa ran you through that. 5-year today. And Lisa, tomorrow, a 7-year issue that's going to get a lot of attention because of what happened last time. But I just don't sense the same nervousness this time around.
No, there's a very strong bid into treasuries, much more so than in the past. Still people watching to gauge foreign appetite in particular. Meanwhile, as you were talking about oil, definitely getting the focus today. Oil prices rallying a bit after getting really hit hard for a number of days because of the Suez Canal story. And John, you're right to bring up this idea of transitory. I mean, this is the ultimate definition of that, to use your words. And yet it does indicate that there is some fragility in an oil market that still has a great deal of uncertainty when it comes to demand in the wake of the pandemic. Julian Lee is a Bloomberg strategist covering the oil markets. And Julian, can you just start by giving us a sense of how long-lasting the effects of this blockage of the Suez Canal could be on the oil market?
Well, I think, it's really going to depend on how quickly they can move this vessel. There doesn't seem to have been much progress at the moment. It's stuck somewhere about 10 kilometers into the canal from the southern entrance, from the entrance from the Red Sea. There's no way of getting around it. So the only way that oil and any other commodities or products are going to flow through or move through the Suez Canal is when it gets moved. And it's really going to depend on whether they can refloat the vessel without having to take any of the containers off the ship. If they can't, then I think the process of unloading it is clearly going to take time. We may be talking hours, we may be talking days. At the moment, we just don't know.
Julian, everyone coming in to work this morning, logging onto the Bloomberg if they have access and going to the Maps Go function can bring up this wonderful looking chart which really illustrates how painful this can be for trade. The yellow dot, of course, where we've been talking about in the Suez Canal, where this is blocked up, and all the white dots, all the ships that have got to go through this particular strait. And this is the problem at the moment, Julian. Whenever there's a crisis, we always talk about the Suez Canal, and a lot of people will push back. The experts in commodities, in trade, will push back and say there is so much effort that goes into making sure this particular point flows through and without any constraints whatsoever. Julian, can you walk us through that? Just how much hard work goes into making sure that that is constantly functioning all year round?
Well, I mean, it is, a great deal of work goes into it. The canal is kept dredged. The side walls are maintained. There is security along the length of the canal, and every step that can feasibly be taken to keep the canal operational is. For some commodities, for crude oil in particular, there are alternatives. There is the Sumed pipeline that can carry oil northwards across Egypt. So some crude could be diverted into that. There's also a pipeline across Israel that links the Mediterranean to the Red Sea. That can operate in either direction. So that, could theoretically be brought into use to alleviate some of the flow of crude oil. But that's not going to help move either refined products or liquefied natural gas or containers or anything else. So, this waterway is vital.
Looking forward, Julian, to when this vital waterway is reopened, what is the pressure? Is it upward or downward to oil? Based on what we've seen in Europe, Germany now backing away from their 5-day shutdown during the Easter holiday, is there a sense that there is more room to go downward in oil based on the fact that the world isn't recovering as quickly as perhaps some people were hoping at the onset of the year?
I do think that the demand picture is going to be key. As you say, the demand isn't recovering as fast as many people thought or hoped that it would do. I mean, I've been arguing in opinion columns for many weeks now that we have this period of weakness in the first and potentially the second quarters of this year before the vaccine rollout is sufficiently widespread and sufficiently far advanced that travel starts to open up again, people start going back into offices and workplaces. And we're seeing that playing out. We are seeing a number of sort of stumbles on the road to widespread vaccination, both with delivery issues and take-up issues among populations. And because of that, we are seeing the demand recovery not moving ahead as swiftly as a lot of people had hoped. Clearly, I think the move up to $70 a barrel for oil was overdone. We've seen a correction from that level, but we have to balance what's happening with demand against what's happening in supply. OPEC and OPEC plus, the OPEC group plus Russia and a number of other allies have repeatedly delayed putting oil back into the market that they had originally intended to return in January. So we are seeing that the supply cuts are, if not being deepened, they are being maintained at a time when the group had been expecting to ease back on its restrictions. And that has helped, I think, to put some of the support under crude prices that we have seen.
Julian, always great to catch up, sir, on the commodity market. Julian Lee there, Bloomberg oil strategist. On the supply side of the story, dominated by the news coming out of the Suez Canal. On the demand side of the story, the news out of Germany has been a key factor. The news out of Europe, extended lockdowns, etc. We announced earlier on this program the news that Germany has dropped a plan for a 5-day Easter lockdown. Huge pushback to Chancellor Merkel's decision, met with massive opposition and anger. And now we understand that Germany is to drop that plan for the 5-day Easter lockdown. We also understand that the Chancellor, Angela Merkel, will hold some kind of news conference at around about 7:30 Eastern time, so in about 50 minutes from now. For crude, we're positive by 2.4%, 2.3% on Brent to $62 and about 18 cents, 59.14 on WTI, up by 2.4%. Joining us now, I'm pleased to say, is David Souby, Ancora Managing Director and Portfolio Manager. David, if we can just stick on energy just for a moment, massive winner in 21, big loser in the last couple of weeks. Your take, please, on that particular sector.
Sure. The first is Jonathan. I remember asking the CEO of Exxon a number of years ago, pre-Rex Tillerson, can anybody forecast oil prices accurately? His answer was no. I think your rule of thumb is then try to look at oil companies on a valuation basis. So near term, they were overbought. Long term, I think they're oversold because they went through a secular decline since 2008 for over 10 years. I think that makes oil more interesting than not in a 7 to 8% real GDP world to be marginally increasing your names within energy and those that are tied to energy.
Is this applicable, this idea applicable more broadly to cyclicals, to the sort of recovery trade that we've seen pause, whether it be the Russell 2000, whether it be travel stocks, or whether it be oil?
Lisa, absolutely. Again, throw in that 7 to 8% real GDP. At the end of February, M2 money supply was growing 27% year on year. A year ago, it was only growing 7%. Fiscal and monetary stimulus, that's now about 45% of annual U.S. GDP. If you put all those variables in the equation, along with the vaccines, you want to continue to be still owning and gravitating towards cyclical rollout, reopening stocks.
David, I'm always interested in the process, not the when. What are the signposts that you're looking for to give you a better understanding as to whether we have lost steam, that the rotation is complete?
It's going to be price and volume, Jonathan, from a technical perspective. It's going to be when sentiment is maybe too euphoric in that space. I don't think we're anywhere close to that yet in the reopening cyclical stocks. Mind you, it's been a significant 7 months that value stocks have recovered, that small cap stocks have recovered. Nevertheless, we've gone through a significant more long-term decline, relative decline for these names, especially dating back to March of 2018, when the tariffs in the trade talks were getting worse for the stock market. While we're only 7 months into this cyclical reopening, I think we've got much more legs to go. History would say that.
David, always great to catch up. David Souby there, Ancora Managing Director and Portfolio Manager. Thank you, sir. That's the debate right now. We get calls on both sides of that debate, of course, and this all started for me a number of weeks back when the likes of Morgan Stanley and Mike Wilson came out and downgraded small caps, started to push back against the early cycle cyclical trade because they no longer think we're early cycle, they think we're mid-cycle now. Also interesting in the last 24 hours, Lisa, to see UBS downgrading big tech 3 months ago, then upgrading big tech in the last 48 hours or so because they think maybe growth tech is back on a table.
Yeah, although David Sowerby put it pretty well, this idea of it's short-term overbought, long-term oversold. And that, to me, raises a question. What do you do now? I mean, do you buy this dip? Is this a dippable buy, a buyable dip? Or is this going to be something that you wait to play out because you see more legs to the downturn? I don't know. I mean, I think that you're seeing people swoop in, and you're certainly seeing that today. And I expect there will be more discussion of that throughout the day. That's what my hunch is,
Nasdaq
John.
100 futures now up by about 0.75%. We'll drive you through to the opening bow with equity snapping back a little bit. In the bond market, stability. Yields stable for now, 162.60 on a US 10-year. Coming up on the pandemic, Lawrence Sauer, Johns Hopkins Associate Professor of Emergency Medicine. From New York this morning, good morning. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Tom Keene, away through the week, back on Monday. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. A new survey finds that President Biden's likely wins on taxes will come in the form of higher individual rates and tougher audits of wealthy Americans. Bloomberg surveyed 15 current and former White House and congressional aides specializing in tax policy, and they said that a proposal to tax unrealized capital gains can't make it through Congress. U.S. Treasury Secretary Janet Yellen has promised to work with Congress to ease the $10,000 cap on state and local tax deductions, known as the SALT cap. That's been a key area of focus for lawmakers in New York and New Jersey. The limit was put in place by Donald Trump's tax law. Lawmakers from high-tax states say that's caused their constituents to pay higher taxes. Yellen says she wants a fair remedy for that issue. And in Germany, that plan for a 5-day nationwide lockdown over Easter has been scrapped. Bloomberg's learned that Chancellor Angela Merkel made the decision after the plan was met with massive opposition. Merkel is trying to handle a surge in coronavirus infections and a sluggish ramp-up of vaccinations. And Intel has unveiled an ambitious bid to regain its manufacturing lead. The company will spend billions of dollars on new factories. Plus, it will create a foundry business that will make chips for other companies. It's an aggressive move that puts Intel in direct competition with the world's most advanced chip maker, that's Taiwan Semiconductor Manufacturing. And Tesla is going all in on Bitcoin. It stunned the market last month with a $1.5 billion investment in the world's largest cryptocurrency. Now, CEO Elon Musk says you can buy one of his electric cars with Bitcoin. Musk also says any Bitcoin paid to Tesla will not be converted to a traditional currency. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Accusations of vaccine nationalism are so wrong in terms of Europe because we are very international in our approach. We're exporting. I think we should maintain that, but have good conversations with other stakeholders about maybe what they might do to reciprocate.
EU Commissioner McGuinness there on the situation in Europe. From New York City this morning, good morning. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Tom Keane out of the building. He'll be back with us on Monday. Here's the Wednesday morning price action. Let's whip through things quickly for you. S&P 500 futures up a little more than 10 points. We advanced by about 1/4%, up 0.6 on the NASDAQ. Not much price action in your 10-year in the bond market. Yields 162.25. A lot of issuance we'll talk about in just a moment, coming a little bit later. For crude, 58.95. We bounced back up 2 full percentage points. You've seen and heard about the blockage in the Suez Canal. That's an interesting energy story we can touch on through the morning too. In the FX market, a break at a 200-day moving average on the euro. We've already touched that a million times this morning. Euro dollar 118.23, and coming at a 0.2%. The PMIs have just been pushed to one side out of the continent this morning. The March PMI, for anyone that's interested, in America coming up at about 9:45 Eastern. So Lisa, yesterday we had the 2-year, today the 5-year, tomorrow the 7-year. Any reason to be concerned about taking down this supply in the next couple of days?
Not based on the action that we're seeing in the bond markets today. I think that what you mentioned about the PMI is really interesting, this idea that we had better than expected data out of Europe. No one cares. At what point does data matter? Or at what point is it all backward looking? And are people looking and trying to game out the future based on some other metrics, John?
They're trying to game out the future based on where we are with vaccinations right now, for sure. Europe versus the US. The new number in the United States, we track it daily. On average, over the last 7 days, your average rate of vaccinations in America, 2.5 million doses per day. Kind of hanging out and in around that level over the last week or so. Let's discuss that now with Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine. Lauren, always great to get you back on a program. So let's just start right here. Yesterday, Texas have announced they're going to widen out the eligibility for everyone, I believe 16 plus, all adults, from next week. Lauren, when you see those kind of decisions being made, do you see that being driven by the data? Is something else driving that story? What's your take?
I think it's a mix. I mean, I think it's less about the data and more about getting as many people into those spaces. So if Texas is creating a space where they can get massive amounts of people and they have the supply to back it up, then, that is definitely an approach that many people are advocating for. And we're seeing it in a lot of sites across the country. I think the key is that the vaccine supply has to back up that process. So giving people appointments and then canceling them at the last minute because the supply doesn't come back may negatively impact people's willingness to come back and try again to get that vaccine down the road. So you have to be careful with that approach. And you can't take that approach and just sort of drop off targeting these harder to reach or more vulnerable populations. So those things have to happen in tandem if you're going to go the way of mass vaccination to everyone eligible.
Lauren, what do you make of the science behind what you can and can't do once you have been fully vaccinated, and the very little detail we've had on that front over the last couple of weeks?
Yeah, I mean, I definitely think we probably could have done a better job of planning to have this conversation. The challenge is that we don't really know, and that's not a space that people are comfortable sort of saying. That's not a thing that people are comfortable saying. We're all learning about what you can and can't do as we see the results from these different vaccine trials, as we see the transmission data and the people who go through the vaccine process and end up not getting sick, which is exactly what you want to see. The first vaccine studies are really focused on how sick people get or don't get after they get the vaccine, less so about that transmission. So we're looking more at whether or not it protects you from severe disease and less whether or not it protects you from actually getting infected. And those studies are happening now, and that's why the guidance is rolling out a little more slowly than people would like. I agree. I think it's important to have a good sense of what you can and can't do, because that's what allows people to say, okay, here's what I can do, here's what I can't do. I'm going to continue to follow the rules. When you ask people to make up the rules themselves, they're always going to veer on the side of what feels more comfortable for them.
I gotta say, it seems like we're moving to a new phase of the pandemic where we started with a scientific conundrum, a scientific problem that people were trying to solve in laboratories and with social distancing measures. And now we have a messaging problem broadly, in addition to a scientific one, when it comes to both the US and who's eligible, who's not, in terms of what you can and can't do after the vaccine, as well as in Europe. And I want to talk about the Angela Merkel reversion, basically saying, forget it, the 5-day shutdown over the Easter holiday is off. Do shutdowns work, or is this just a mirage to show we're getting tough?
Yeah, I think shutdowns do work, but they also have a dramatic impact on the population, right? So before the pandemic, we really had no data on whether or not these massive shutdowns and border closures and things like that worked. We just didn't have the experience with them to know. And data are coming out of this pandemic to say that they do work, and when they're very restrictive, they also have a negative impact on the population. So use them with caution, use them with care, and do all the other things like the social distancing, like the masking, and of course, like getting your vaccine, that we also know work, that allow us to ease up on those restrictions safely, slowly, and carefully.
Meanwhile, Pfizer is testing a COVID-19 pill to remedy the illness if you get it quickly. How much does this change the equation if this becomes widely available and actually is effective?
Yeah, this is huge, because one of the challenges that we've seen in the therapeutic side, so on the drug side, less on the vaccine side, is something that we can give outpatients who may have been recently exposed or have just started getting sick. That's easy to administer and can be done in the outpatient setting rather than an injection or an infusion that can be more challenging to quickly administer, or even give a prescription and have people head home and take themselves. So I think everyone's going to be watching this. All eyes are going to be on the data from this study, and it's a very hopeful option. So as we start to add more of these therapeutic tools to our toolkit, I think we're going to see these options that allow people to safely stay home, not seek care at a hospital if they are less ill, or if they're really early in their course.
Lauren, thank you. Please come back soon. Stay close. Lauren Sauer there, Johns Hopkins Associate Professor of Emergency Medicine. Just some news on the shipping incident in the Suez Canal. Traffic expected to resume soon, according to GAC. GAC, a shipping services company, commenting on the Suez Canal, saying the traffic is expected to resume soon, Lisa. That news coming in the last couple of minutes.
And pretty much in tandem, you're seeing oil prices just decline a bit as people assess the temporary or not effect of this. John, you were right. It seems like it's very much temporary, but the question, as Julian Lee was saying, is it days? Is it weeks? It seems like maybe hours.
It's not about being right or wrong. It's just about the media again and again and again jumping up on a story of pretty pictures on an issue that was clear was going to be addressed pretty quickly in the Suez Canal, Lisa. That was my frustration this morning.
And that's a fair frustration. I think the bigger issue, and I would agree with that, and I think it's important to frame this as a standalone incident that is temporary. There is a bigger issue that's being fed into food prices that have been elevated. You see across the world with shipping delays, with prices rising to the highest since 2016. And that focus, I think, has longer lasting legs. How long? That also is a question.
I totally agree with you. Lisa Bravitz, Jonathan Ferro, counting you down to the market open as we drive you forward. Equities are up 0.7% on the NASDAQ. Bond yields are stable, up almost a basis point to 162.78. This is Bloomberg.
just COVID, but it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. Having the destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in, being able to break plates, being able to write out whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
Come to a place like this and be able to break some stuff and release some tension without going to jail.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The public is still engaged. Volumes are still heavy, flows are still strong.
Whenever you have this much stimulus thrown into the market, you're going to see things happen like we're seeing today.
While a bunch of the markets could look frothy, there might be room for the Fed to normalize rates.
It's just not there. I don't think the Fed's ever going to see runaway inflation.
The economy and the stock market don't always go in unison. This seems to me to be a year in which Main Street beats Wall Street.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Yellen and Powell testify day 2 from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Lisa Abramowitz. I'm Jonathan Ferro. Tom Keene is off today. In your equity market, up 13 on the S&P 500. We advance 1/3 of 1%. The NASDAQ outperforming this morning, up 0.7%. This morning, Lisa, 10 a.m. Eastern time, they go in front of the Senate Banking Committee.
Yeah, and the range of issues here is just phenomenal. The idea of, yes, you have the stimulus and where we are there, how it's getting deployed, how much has been deployed. Then you have taxes, an issue of Yellen and how much she supports raising taxes on a variety of different constituents. Then you have inflation, and of course you have international relations. One thing that we have underplayed today is really Janet Yellen coming out in support of an IMF fund to support developing nations that President Trump, former President Trump, actually shot down, raising questions about the international collaborations on that front too, John.
A range of issues. We'll touch on the international ones a little bit later in the hour. Let's sit on the domestic story just for a moment. The push to maybe hike taxes, Lisa, going forward from here. And we talked about the bias of this market right now to focus overwhelmingly on the spending side of things, the stimulus, the relief. At some point, taxes hit the radar. I think they already have.
Yeah, although you're not seeing it necessarily in people's price targets for equities. Perhaps that's the reason for the pause, although you'd expect that to hit the big tech names harder than perhaps the Russell 2000. There was a story today on the Bloomberg talking about how the most likely tax hikes will be on wealthy individuals and that corporations probably will be secondary in that push.
Tom Keene dropping an email in my inbox on Spurs.
Oh, no.
And someone that Tottenham Hotspurs is partnering with. I'm going to move on really quickly. Hi, Tom. I assume you're watching. You're meant to be on vacation. Unbelievable. Here's the price action. It looks like this, 7 Eastern. Equity futures up by 1/3 of 1% on the S&P 500. NASDAQ 100 futures up 0.7%. Into the bond market we go. 5s today, 7s tomorrow. Lot of supply. 162.25 on 10s right now. Unchanged. Outside of that, crude still positive. Bouncing back after a really ugly story the past week for crude prices. 59 handle on WTI. And equity futures doing okay, up 1/3 of 1%. But the FX story got my attention. I know it got your attention too in the last day or so. Euro dollar breaking down 118.25 and down 0.2%, dismissing the PMI data, the preliminary read for the month of March. In Europe, at least, the US PMI data coming up a little bit later this morning, Lisa.
Yeah, the divergence between Europe and the U.S. continuing to widen, despite any data showing otherwise, because it is backward looking. We were just talking about this. What we're looking at today, 10 a.m., day 2 on Capitol Hill. Jay Powell and Janet Yellen are appearing before the Senate Banking Committee, and we talked about the range of issues that they will be addressing most likely. There are other issues as well, Bitcoin among them, that potentially could come up. And then also the discussion of their collaboration. The head of the Treasury, the head of the Federal Reserve, they seemingly are interchangeable in some ways. How do they work together in a new way going forward? Then 10:30 a.m., U.S. crude inventories, particularly in focus because of the Suez Canal issue. Yes, it is transitory, temporary, seems to be on its way to being resolved, and yet we have seen a lack of demand, at least relative to expectations, that has been borne out in some of the inventory data that we'll be looking for. And then 1 p.m., the U.S. is selling $61 billion of 5-year notes. We're getting toward the more interesting maturities, John. Perhaps we'll get some action here to give some indication of what longer-term Treasury demand looks like, both here and abroad.
Lisa, looking forward to the supply a little bit later. A 7-year issue will get our attention tomorrow, I'm sure. Let's turn to Mona Mahajan now, Allianz Global Investors U.S. investment strategist. She joins us. Mona, great to catch up. As you've said, we're starting to see some fatigue in the big winners through the last year, going back to late October as well. I'm trying to understand how you approach a market like this one right now. Huge rip since the end of October. You start to see fatigue. How do you approach what you see on the screen?
Yeah, absolutely. Look, I think it's been a phenomenal market since really last March of 2020. This year, 2021, has really been a story of the reopening trade, that value trade, the rotation into value, into the reopening stories, and out of really that growth in some of those large cap COVID winners from last year. Of course, over the last few days, we've seen a bit of reversal of that because rates have started to come down a little. Maybe there's some questions around the reopening, given news of variants, given news of some states seeing rising cases, clearly given what's happening in Europe. So we're starting to see a little bit of pause around that reopening value cyclical trade. What we're thinking about, of course, is as we're heading to this summer of really that real unleashing of pent-up demand by the consumer and perhaps the real unleashing of the stimulus really flowing through the system, we may see this value cyclical rally have one more leg or maybe some legs through the summer. But what we're really thinking about then towards the second half of this year are some of the risks on the horizon. And those include one, peak reopening. At some point, you're going to get a peak growth rate. Maybe it's 2Q, maybe it's 3Q. But at that point, the second derivative starts to slow again in terms of GDP growth. The second, of course, is we do think that yields can continue to grind higher. We do think that the 2 handle on the 10-year is feasible this year. And so that will cause some additional volatility and pressure. And then finally and thirdly, of course, is the Fed, who has been quite accommodative thus far. We think that continues for most of this year, but at some point, they're going to have to come off this crisis level accommodation that they've been providing. So this was really rates at the zero bound, unlimited QE to some extent to really help at the heart of the pandemic. We're now clearly trying to reemerge from that. So, some things we're thinking about, a lot of the good news, a lot of the reopening story, a lot of this value trade is starting to get priced in. So keep in mind, if you haven't yet, you do have an opportunity to tactically layer in some cyclicality, but just be mindful then as you're heading towards that second half of the year.
Mona, you've gone through a lot of issues there. Everyone's got their own approach, their own process to work through. A lot of people talk about where we are in the cycle. The early trade is the early cycle playbook still with us? Is that going to last another few months, maybe another quarter, another few quarters? Morgan Stanley think we've already seen the early cycle move. Do you use the same approach, Mona? Do you have that early cycle playbook? And when the cycle do you think we are in this market?
Yeah, absolutely. I think we are reemerging from a recessionary environment. And of course, this recession is different from some of the others, which are more, rates driven or more consumer driven. This was a pandemic and a health crisis, but we're clearly reemerging from it. And that playbook actually came to fruition in a very real way this year. So certainly areas like energy, financials, industrials, the cyclical stocks, the reopening plays, those all took a nice leg higher. And so a lot of what they call the easy money perhaps has been made. But that being said, we do think that the earnings growth environment, there's still upside to some of the numbers that we're seeing out there, especially on some of these sectors like financials, like energy, like industrials. Some of the areas that do well as rates continue to grind higher, of course, financials, especially with the steeper yield curve. We think areas like industrials may have some legs given the infrastructure package that we think will start to come to the forefront in the weeks ahead. Even areas like clean energy, which has been a real focus of the Biden administration and has now sold off, as the NASDAQ has sold off, or as a lot of the growth stories have sold off, could have another leg. We think that's a secular growth theme that if you haven't yet had exposure to, is an interesting one here. So certainly we're looking at it more from now, a more active approach, taking a sector, by sector positioning approach rather than a broad market approach. And so I think, at this point in the cycle, after we've had this reopening rally, we have to really be more selective going forward.
Just to be clear, Mona, is the reopening rally done? Have we reached a plateau and we're just going to fluctuate from here? Is that what you're saying?
I think that there is one leg higher. And, if you think about seasonality, sometimes it's sell in May and go away. But generally this year, I think, when you look anecdotally, those summer months are really when we're going to see that pent-up demand unleashed. So, the consumers will hopefully have the next round of stimulus checks in their pockets. The vaccination program here in the U.S. will be more fully rolled out. And so you'll really see then that demand for areas like travel, like going back indoors, perhaps even to restaurants, going to sporting events. And so I think that when the economy really is going through that hyper demand phase, we'll see the market actually react to that. But that's when you have to start thinking about, well, after that, what happens? Are we at peak reopening? And so I think, you probably have a little bit of steam left in this rally. But it's probably time to start thinking about being a little bit more neutral or cautious as we head past the summer months.
Mona, you used one line in this conversation that always jumps out to me when people say the easy money might have been made. And I always pick up on it, so forgive me for doing so. Did it ever feel easy?
Ever since March of last year, it's felt a little bit tough. And so I think, that the whole dichotomy between Main Street and Wall Street has always been a tough one to swallow. But I certainly think in this case, the markets have been very forward-looking. And perhaps they were really since last year looking towards the second half of 2021. And so they were very astute in realizing that at some point we will have a program in place that will help us get through the pandemic to reopen fully. And interestingly, the retail investor last year played a very large role in that. So, the retail investor in some way was the winner in 2020, really kind of kept that optimistic outlook throughout the year. And so they really benefited from that. So yes, we've had an optimistic reopening trade, you could argue, since perhaps March, April of last year. So hopefully, most investors participated in some way in that. The good news was last year, if you had the growth stocks, this year you could actually have some opportunities in the value stocks. And so that's why we think, though there is still a little bit more catch up and perhaps a little bit more rebound to go in that sector. If you think about it, a lot of these value names like financials, energy, industrials, they are still flat, slightly up to March of last year. And so they have some catch up to do to the NASDAQ, which is up, 20-30% from its February 2020 highs. So interesting market still, one where, again, just be selective, be active, but you still have some opportunities to go.
It's never easy. Mona, it's great to catch up. It's never easy. Mona Mahajan, Allianz Global Investors US investment strategist. And to Mona's point, Lisa, it's never easy because it's hard to be optimistic when the world around you is falling apart. And that was the difficult part of the last year.
It's hard to be optimistic? Who knew? You think that it's hard for me to be optimistic?
I think it's definitely hard for you to be optimistic. That's for sure. Coming up, 8 a.m. Eastern, Chris Grisanti, MAI Capital Chief Equity Strategist and Senior Portfolio Manager. Equities bouncing back, up 0.8 on the NASDAQ, up about 0.4 on the S&P. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. At the Suez Canal, authorities are said to be close to refloating that giant container ship that ran aground and caused a massive traffic jam. That comes from an Egyptian shipping logistics company. The Ever Given became wedged lengthways across the canal yesterday in Egypt. That's left at least 100 ships gridlocked as they attempt to transit between the Red Sea and the Mediterranean. It's the same story in Israel, where a deeply divided country has failed to resolve a political impasse in its fourth election in 2 years. Neither Prime Minister Benjamin Netanyahu nor his opponents have a clear path to forming a coalition government. If no one is able to build a parliamentary majority, there could be another election. President Biden is urging Congress to pass gun control measures in the wake of the shooting at a Colorado supermarket. The president called for background checks and a ban on assault weapons and high-capacity magazines. Earlier this month, the House passed a bill that would require background checks for all firearms sales, including at gun shows. In Germany, that plan for a 5-day nationwide lockdown over Easter has been scrapped. Bloomberg's learned that Chancellor Angela Merkel made the decision after the plan met with massive opposition. Merkel's trying to handle a surge in coronavirus infections and a sluggish ramp-up of vaccinations. And GameStop is hoping to bounce back from disappointing earnings in the fourth quarter. The video game retailer wants to make good on a comeback plan that had helped to turn it into one of the year's hottest stocks. GameStop has appointed a trio of executives with tech experience, so they'll be a big part of the plan to make the company an e-commerce power. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Indicators of economic activity and employment have turned up recently. Household spending on goods has risen notably so far this year, although spending on services remains low, especially in sectors that typically require in-person gatherings.
Chairman Powell on the U.S. economy alongside Secretary Yellen. They'll do it again today in front of the Senate Banking Committee from New York City this morning. Good morning. Alongside Lisa Bramford, I'm Jonathan Ferro. Tom Keene away today. Here's the price action for you in the equity market. The S&P 500 futures up 18. We advanced 0.4%, up 0.8% on the NASDAQ. Into the bond market we go with yields higher by almost a basis point to 162.95. In the FX market, euro dollar back down to 118.28, just about holding on to a 118 handle. Crude still positive, Lisa, 59 handle, even with this back and forth over the Suez Canal in the last day or so.
Yeah, perhaps as people coming in and reassessing this reflation trade, the theme that you've picked up on today, this idea of are we seeing a pause that's going to continue in terms of this rotation into cyclicals, which includes oil, which includes yields going higher, it includes banking stocks, or is this something that is a reassessment of the market, I think is the key question for today and frankly for the entire week, John.
That is the debate of the moment as we count you down, drive you forward to the opening bell. Let's drive you forward to Washington, D.C. and the latest on the policy front. Kevin Cirilli, Bloomberg Chief Washington correspondent, joins us now. Kevin, Intel throwing billions at the U.S. economy. Walk me through why this is so important and why it lines up so well with the approach from this administration and, for that matter, the one that came before it.
Two things. First and foremost, manufacturing jobs, which we mentioned a couple of weeks ago, that are going to be intricately linked to the semiconductor chip shortage that we have seen the Biden administration really say is a top priority on the U.S.-China front. And then secondly, in terms of infrastructure, I mean, this is a clear opening bid, so to speak, that chip infrastructure, manufacturing is going to be intricately linked to a longer-term U.S. domestic strategy to diversify the supply chain. And candidly, I think Intel getting there first is only going to attract other companies to do the same thing.
They want to go after China. They want to go after Taiwan Semi. The U.S. wants to make sure we invest in this country. The companies want to track down Taiwan Semi, which has done so much over the last few years, Kevin. There's a lot of catching up to do. What are the administration doing to help these companies achieve those goals?
Well, look, I think that's where things get dicey because Republicans would say, John, that they're not doing enough and that by raising the corporate tax rate, that's only going to deter companies like Intel and other companies from investing in the United States and doubling down in terms of where they would like to make investments domestically. So that's a part of a longer-term debate that once infrastructure really gets started with is going to be very difficult for Democrats and Republicans to come to some type of consensus because yesterday I was speaking with lawmakers and they still remain worlds apart on how to pay for $3 trillion worth of stimulus.
Okay, perhaps the payment is the main issue in terms of getting some sort of bipartisan support for a bill. But there seems to be a consensus that there are problems with respect to technological prowess and with respect to the supply chain. A viewer who works in farming wrote in, the supply chain has become hyper just in time with zero capacity for exogenous shock. And we're seeing that in the food inflation that we're seeing, as well as in delays for chips and other supplies. Is there any consensus on how to combat some of these supply chain kinks and the sort of disruptions, these exogenous shocks that can erupt?
Yes, there is, between people like Senator Mark Warner, the chairman of the Intelligence Committee, even to some extent Senators Tom Cotton and Marsha Blackburn, two Republicans who have been urging for there to be a diversification of this supply chain. I go out even to lawmakers like Congressman John Garamendi, who's a Democrat from California, Napa Valley country, and he has urged for there to be some more diversification. I think you're going to see over the next couple of weeks and months people like Senator Chris Coons, a Democrat from Delaware, Biden's home state, put together some type of package on as it relates to China. But the hope, from what I'm hearing based upon my reporting, Lisa, is that this type of package will be a nonpartisan bill that will move through Congress, similar to the bill of a few years ago that Senator Schumer and I believe Senator Cotton were able to push through in terms of investment to diversify supply chains.
Nonpartisan bill is hard for me to wrap my head around right now, and I'm trying to figure out how big it would be.
Work.
I imagine a fraction of $3 trillion. How could this be constructed? In other words, what could a size of a consensus bill be? And does that mean that this $3 trillion effort really has to be piecemeal, a number of different bills spread out over perhaps months or even years?
No, I think it's a really good point. I think this is the type of legislation that, quite frankly, doesn't really get the attention in the mainstream press. I think it's more in the wonk world, in the policy weeds that we focus on. And so I do think that this will not, while it won't be a major initiative in the sense that it will grab a lot of water cooler political chatter, similarly, for the past couple of years, there have been funding bills, there have been defense funding bills that typically are bipartisan that ultimately get through. And I would argue that based upon the conversations I'm having, you could see a bill like that move on China.
Kevin, before we let you go, I do want to talk about China and how it folds over into the foreign policy effort on the multilateral approach that this particular administration is trying to develop. It's okay to do that on foreign policy. A lot of people are endorsing that approach right now. But if you maintain the America First approach on the economy, how do you support your allies and make sure that China and the Communist Party doesn't leverage the commercial ties it has with the Europeans?
Simple. It's auto-democracy versus auto-technocratic regimes. And that's really the battle line that I think this administration is trying to put forth, in the sense to say, if Europe were to make deals, especially on 5G technology, on other parts of technology that relate specifically to benefit the Communist Party of China, would that be a long-term play that they would be willing to grow in? Or do
honestly,
they want to go with,
hold on a second, Kevin. Kevin, I understand that this is a highfalutin topic, this respect democracies, but at the end of the day, it's about money. And if China is getting money and getting business to Europe, doesn't that speak louder?
No, I don't think it does, because I think ultimately it comes down to democracies and the value proposition of investing, which, by the way, democracies do have a financial benefit. But if you look at some of the human rights abuses, the genocide occurring in the Xinjiang province with the Uyghur Muslim minorities, I think this is a bigger issue than just money.
Kevin, it's good to catch up, sir. An important point. Kevin Cerulli, Chief Washington Correspondent and host of Sound On Bloomberg Radio, weekdays at 5 p.m. Eastern. Things have become a whole lot more complex in the last decade on the China-US front, that's for sure, Lisa.
Yeah, I think this is the real conundrum here. At what...
Okay, guys, something went wrong with camera. I'm trying to fix camera as well. I need to speak to my technical staff. I'm going to place a stop on profit for euro at 118.30.5. Just right here. Okay. Stop on profit placed at 118.30.5. Okay. So all of you, if you enter this trade and if you decided to follow this trade, please do place stop on profit. Okay, speak to you later.
Alongside Lisa Abramowitz, I'm Jonathan Ferro. Coming up on this FX market on euro dollar at 118.34. Kid Juice of SocGen. This is Bloomberg.
All right, guys, that's better. Camera fixed. Like I said, please place stop on profit 2 pips above your entry level. If you purchased at 118.285 plus 2 pips, 118.30.5. Okay, and depends how much broker pays you per pip, you will get the profit, 2 pips. This is what it's all about, to trade as a day trader. You need to, based on a relatively small amount in pips, you can make quite a large amount of profit per day. Because we place many times with euro, with other pairs orders, and then small profit, small profit, small profit, and then at the end of the day, we end up with quite substantial amount of profit. How to do that? You can get, you will find from our strategy that you can get it from companyi.co.uk, or you can see the address on red line on our ticker. You can get the strategy and you can discover the secrets, how we trade. I'll speak to you later, guys.
By the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
From New York City for our audience worldwide, this is Bloomberg Surveillance live on TV and radio. And here's the price action this Wednesday morning. Good morning to you. A bounce back in the equity market, the S&P 500, the Nasdaq, the Russell. The Russell is where the outperformance is. That's where the underperformance has been more recently. On the Nasdaq right now, up 0.8%. The key to that may be some stability in the bond market once again this morning. If you switch up the board and get to 10s, just quickly, I'll run through things. 2s, 10s, 30s. Yields unchanged at 162. We get some 5-year supply today, some 7-year supply tomorrow. Your 30-year at the moment, 232.26. Yields doing not a lot. We get Chairman Powell and Secretary Yellen day 2. I'm sure you're super excited for that. Let's finish on this in the FX market. Euro dollar, a break at a 200-day moving average. Looking forward to catching up with Kit Dukes of SocGen about that. Finally, a break in the single currency. Euro dollar 118.32, weaker by another 1/10%. We've talked about the incremental bad news coming out of Europe, the incremental better news coming out of the United States, and the limited ability to push that through this FX pair. More recently, yes, we've had a move from 123 down to 118, but that 200-day moving average has been really quite stubborn, so that break has been key. And now I'm trying to worry and think a lot more about whether we've got...
Okay, guys. Position closed, as you can see. Just right here. We made already profit. We closed position. We made trade. It took us from 10:30, 20 minutes past 10, until, what time is it now? 11:30. It took us about an hour to complete trade from the beginning to the end, as you can see. And in our case, we got 2 pips. We have £200 in profit. In your case, it all depends how much you decided to invest in this trade and what you trade. You can trade CFDs, you can trade E-minis, you can trade even options. It's all about how much broker pays you per pip. For our strategy, you can go to company.co.uk website. Okay, well done, guys. Let's look for another pair, and I'll speak to you later.
That transition to digital, it continues. John, let's take a look at Viacom.